this thing I would show you. Okay, so we are going to be going to the daily. So no, okay, but the idea didn't actually start from daily, it started from 4 hours. So your 4 hours here was bearish as of yesterday. It was bearish, and you know, once, like I used to say, once you have a new low, what you would expect is a pullback. Okay, so with that in mind, I had a bullish bias that I was going to buy to the upside. So and just like I said, just like I mentioned, once the market forms a new low, so this is sorry, this is a break of the liquidity. So this is a new low, and it's stopped at that point. Now, like on like some other ones where immediately forms a new low, it begins to pull back. This one, it went deep into a pullback. Went deep, dumped deep before having this nice pullback to the upside. So that was the first thing. That was my first observation, and that is your market bias. So I've settled my market bias, and I'm looking to get an entry. So on the 4 hours, I think on 1 hour, or 1 hour, okay, so on 1 hour we have this nice order flow. This is the last flow of the other flow. That was how I got the second trade actually. But in addition to the other flow, okay, there was also a raid and run, which I will show you guys. So how did I get the first one? I think on 15 minutes or 5 minutes. I can, let me see if, okay, yeah, so it's on the 5 minutes. On 5 minutes, you have this bullish, after breaking this place, after breaking, yeah, okay, so you have a break of structure, a break, or whatever, change of structure, whatever it is that you need to call it. You have a pullback and another bullish, run to the upside. So your structure on the 15 minutes is bullish. Okay, and then where am I going to get my trade? This is it. If don't worry, see, if we don't finish this session today, whether we finish or we don't finish, I'm sending all of you out. So this is the other block to choose. Now, why didn't I choose this one? Because this had already mitigated it. There's nothing to mitigate here again. Nothing to mitigate on this other block. If let me just expand on that other block. Now, if this week had not gone as deep as this, yeah. So let me remove this. If this week had not gone as deep as pulling back into this other block, say you just stopped at somewhere around here, then the low of that week would have been my inducement or my LKL, and you would get your induction or your induction actually, or inducements then to the upside. But because this deep, this what's it called now, this week was too deep, and even apart from that, if you go to the 5 minutes here, there's nothing. Where is it? Okay, yeah. So this right here, this other block here has been mitigated by this. So there's no need for this one to form an inducement, or there's no need for the market to induce this particular other block. The whole thing is here. I just use that as a buffer. So the whole thing is there, and this other block mitigated this one. No need for this market to come down to take out this before going to the upside. Okay, so that was how this was gotten. And for the sales, I think on the 1 hour, Okay, so for the sales, you have definitely you have a bearish order block here. So if you are not careful and you did not place your break even, or you are not taking profit or something, this will have taken you out before eventually going to the upside. Okay, so this bearish block was where this rejected from to give us, sorry, not that place. Yeah, this place. This rejected from before going to the upside. Okay, and would if say you want to get something like this on a lower time frame, you can also enter, like you can just edge your trade. But I didn't enter the sales. I didn't enter the sales. I just entered the buy, and that was not where it is. Yeah, this week that touched this other block. And yes, your 1 hour is still bearish. This is your bearish 1 hour. There's nothing that that forms a continuation. So there's no break yet of your 1 hour. Your 1 hour is still bearish, and this reacted from the 1 hour bearish other block. So if say you want to take a trade like that, you would want to edge your trades. Nothing on 5 minutes yet. Now all these are just insights. In real time, definitely in real time, I didn't take the trade, but I mean, at the end of everything, at the end of the trade, you're able to look back and, oh, this was what happened. This was why the market did this. But then in real time, you are definitely going to be seeing. You're not going to be seeing. You're not going to be seeing whatever it is that market is doing. Okay, so I said I wanted to show you from 1 hour, the market is bearish. This week here, this block, this what's it called now? This box here is your 1 hour order block. Okay, and this week, you rigged into it before going to the downside. Now, if you want to take a trade based off that, you could just use this other block. Now, this other block is a complete trend. Like I said, range, that video is something that I find very enlightening, personally for me, because I used to take my trades, and I used to take, all this. Take for example GU now. Say this GU. Once you get to this place, this is the kind of entry I'll be looking for. Another block, then two consecutive candles to the downside, and I enter on the replay on the to the downside. So if you had wanted to take an edge trade, this would have been your best entry. You put your trade here, then you put this here, 3.6, whatever, and you have how many pips? I don't think you should be up to 30. Yeah, that's just 18. That's just 18 pips. That should be about 1:5 or thereabout. And this is also a read and run. This is liquidity to the top, liquidity to the bottom. It took out the top first. Let me just illustrate what's happened here. So you have a run, this took out liquidity like this, took it out like this. So you have both sides of the market having money. The thing is, they induced buyers here and they induced sellers here. That's just the simple explanation of read and run, liquidity, incomplete trend, and whatever it is that I named it. They induced buyers, break of structure here, they induced buyers, break of structure to the downside, they induce sellers. So where is market going to go? Where it trades first is what determines the final direction of the market. So say it raised the top first, which it did here. So that is direction of the market. Or say it does something like this. Okay, it raised the bottom first, then the market is going to go to the upside. Okay, so that just keep that image in your head, and I'll be going to the 15 minutes to show you how I got this long. The same thing that happened there is the same thing that happened on the 15 minutes. Oh, okay. So this left liquidity here, and left liquidity here. Now this what's it called now? What's this broker? This one that this candle is not correct. On my broker, it's shorter. On some other brokers, it's also shorter. But the idea of this thing is also the same as what I showed you previously. There should be a break here. Let me see on 10 minutes. There should be a grab of liquidity or inducement or something like that. Yeah, this. So they induce sellers into the market, induce sellers into the market, induce buyers into the market. Where is the market going to? Where would you get your final direction? Is wherever the rate falls. Now, I don't mean the market do something like this. Okay, then this will have been a nice sale. Then you have a 1 hour bearish sentiment to support the downtrend. But they rated this bottom first, and you have your 1 hour bullish order flow. You rated the bottom first, you have a 1 hour bullish order flow within this order block. This order block is your supporting or is your demand. Now on that 15 minutes, okay, they did this. They swept this low. Now, how do I enter this kind of trade? Go to the 1 minute, 1 minute or 2 minutes. Let me see. Is it this one? Nope. Yep. Yeah, this. Yep. So this is how you enter this kind of trade. So, like I said, just like you enter there, you have a bullish order block followed by two consecutive. You have a bearish order block followed by two consecutive bullish order block. So you have this followed by two consecutive bullish order block. Then you can simply just use this as your entry. Though I left a bit of gap, I think on 5 minutes or 3 minutes, it was a bit much. But then that's just the idea of that entry. Okay, it's not so visible. You have just a bullish order block here. There's no small block. But on your 2 minutes, you have this small block here engulfed by two consecutive bullish order block. So once the market is coming down, okay, once the market comes down, you would want to place your trade here. Maybe give it a bit of space or something, whatever it is that is comfortable for you. If the stop loss is comfortable for you, fine. If it is not, then you can just look to enter the better entry. So that is how this long was gotten. And the exit actually, let me see. Yeah, so I plan to exit around, not this point here. I mean, higher than this. Let me see. Yeah, higher than this. To this point, I plan to exit around that place because I felt that was where the liquidity that the market needed to grab is. Okay, so nearly the market, broke 1 hour, the 1 hour block. It returned to the downside, and I could not maximize the whole TP. This TP was not where I closed. I closed, I think I closed a bit around here, then I left the remaining to run, and the remaining went to the bush. Okay, so yeah, the trade started from here, kept small around that point, took another portion around this, then the remaining. Okay, so that was how this particular long was taken, and for this one also the same thing, the same concept. So you have your bullish order flow continues. Yeah, this is your high, this is your low, this is your high, and it hasn't formed a new higher high. So this is your high and this is your low. Okay, so we are playing within this point. We are playing within that point, and we are trying to find a continuation to the upside, because I never for once thought that this would hold, because there's liquidity above it, there's liquidity above here, and I wanted the market to come get it up to this point. Then, that's when I'll be comfortable with a short. I knew the market was going to come down. I knew this was a pullback, but I wanted the market to come to this point before getting my entry of a short, my short entry. All right, so the same concept. It formed a new low. All right, so once it formed a new low, I just was monitoring it on 5 minutes, or 5 minutes or 3 minutes. I think the entry was on 3 minutes. Where is it? Yeah. So the same concept. It formed a new low. So the last order block, this order block was followed by 2 consecutive bullish candles. So 2 consecutive bullish candles, and what would you have? You would have this as your POI, and I don't know why this shifted to this point. So that's how it should be, and your stop loss just below that point. So, and you have a nice trade to yourself. Yeah.
Sorry, what's the high of this low?
Huh?
The high that formed that low on this time frame.
What low? This low?
Yes, the high that formed it.
This high?
No, like I mean the high that formed this low. If you want to look at the other flow.
Okay, you're talking about this.
This? No,
this.
I mean this.
I mean,
this is the high.
Can you annotate? Okay, yeah.
Is that the high?
Are you talking about the other flow?
Yes, the other flow.
Yeah, that's the high.
Okay, if sorry, let me erase it. If that's the high,
okay,
wouldn't you have waited for like the candle to close above it to get your range?
The thing is, range entry is quite different. Okay, it doesn't need to break anything. It doesn't need to. Once all you need, okay, is just a liquidity grab, and it did that by grabbing liquidity here or this low, okay. And once you grab liquidity, now it's not every time this is on certain situations that this kind of entry works. Now, if you are waiting, if say the market forms a new high and you just want to short immediately, I mean, there are certain things that you have to consider. Now, for example, the general trade or the general idea of this is that the market is bullish, okay, and you would want to look at the nearest POI to whatever it is that you're doing. And nearest POI is still, I think, around there, down there. All right. And since the market has formed this, all right, market has formed this bullish, range. Now, I'm not saying the market cannot break it. Definitely anything that moves can definitely be broken. So if say the market comes down, I'll take the loss and I'll enter at this point. But then this is also an example of an entry you would not need to worry about whether you are waiting for a break of structure, a break of order flow or something. Once it takes out liquidity, that's the first thing you have to look at. Takes out liquidity, go to a lower time frame or something, or where you feel the market is visible. You can get that kind of setup. And usually is within 15 minutes, within 5 minutes and less. Say 5 minutes, 3 minutes, 2 minutes, 1 minute. So you just monitor the market and whatever it is that the market is going to do within that kind of time. Okay. And say, now take for example this one now. This is your last order block. 2 bullish candles, but it never even got. If you are to use this one, you will miss the setup. Although you are correct, but you will miss the setup. So on 3 minutes gives that appropriate. So say the closest highest time frame is what you should use. Where is it? Okay, yeah. So the last order block followed by 2 consecutive bullish candles is like saying something like, market is going like this, market is going like this. But instead of market to form a new low, market does what? It does something like this. A failed low, and it continues to the upside. That is just what this is. That is what this entry is all about. It's all this bearish order flow or structure continues to go down, but eventually the market doesn't form a new low, but instead it grabs, after grabbing liquidity, say it's grabbed liquidity from somewhere around there, maybe something like this. Okay, grab liquidity around there. So instead of markets, going to form another low, it does what? Stations around here to reverse to the upside. Okay, maybe say, let's just imagine it's a bullish scenario, and it's this kind of entry. It's very useful, especially if you are looking for a reversal or you are looking for a pullback. You are trying to do a counter trend. It's something that is very useful. Now, say for example this one, though I didn't enter this trade, but it's also the same thing that happened here. So after the markets, after breaking your 1 hour high, this other block here, you see on 15 minutes, the market, no, not 15 minutes, 5. Yeah, on 5 minutes, you have this other block that is followed by this consecutive bearish candle. And what do you see? Now you can find it to the other block that's engulfed within it, or you can just put your trade there. And what do you have? You have a sell. Now, the reason why I did not take that sell was because I never believed that liquidity would cause that deep pullback. Yeah?
Can I just ask? Wait, don't go.
Yeah.
Can you open that part again?
What part?
Thank you. Can I just add something? You leave it like this.
Yeah.
This is a range, if I'm not mistaken, Abi.
Yep.
Consecutive bullish count. Although that one did not close up. It did not close below. Okay. No problem. Thank you. And
So,
I'll watch the video. No problem.
okay. So that's just the idea of having to wait for a new high. Once it forms a new high, now so like I said, the only reason why I did not take this kind of trade was because my bias was what, for the at least till it got to this high, it was still bullish. Probably if I had got it to this high, then I would have changed my bias and I'm confident of the short. Now my bias until this time was still bullish, and I think I took another trade here. No, I can't hear you, Zich. I took another trade here. Your voice is faint. I took another trade there, which ended in loss. So, yeah, I think that yeah, I took a trade there because I felt this took out liquidity from here, and then the range broke it. I think I wanted to enter around here again, but the market never got to it. Let me see on 2 minutes. I think my entry was on 2 minutes, but the market never got to my short entry. Since I knew that since that point of liquidity was broken, then definitely, if you have a question and I can't hear, just drop it in the chat. So I would. Okay, so yeah. On 2 minutes, I wanted to sell from here since it broke this place. I took a long trade here. Okay, so that long trade was broken, and it was broken by this particular order block. This particular order block broke this particular order block, broke this low here. This low here that took our liquidity from this previous low was this one broke it and market never got to it. And I would have, probably taken a sell here, then close it around this point, around this LKO here. Well, I might definitely know it to that point, but yeah, I was hoping to take a sell, take a sell to this point. So that's just how you deal with the market and how things runs. Then I said I was going to create the one for today. So I think the why the market ran to where it ran to is self-explanatory. Your 4-hour is bullish, or sorry, your 4-hour is bearish. So once it took out this liquidity, mitigated this place, which I honestly wished this thing came here. This would have been a nice hold. I would have just be holding two opposite trades, this long and this short. So whichever the one market wants to get to, it would get to. Okay, so this one was because definitely on your 4 hours, we are bearish. Okay, so this is a 4-hour low, 4-hour high, 4-hour low, and yeah, I guess that's it. We've not formed anything. This 4-hour low, it might break it, might not break it, depending on what the market ends with. At the end of the week, we'll be able to know, but I feel you should break it. I mean, I feel the market should come to this point here. Take out this, take out this, take out this, and settle with a short around that point. So I guess that was all the trade I wanted to take yesterday. So 2-3 successful trades were half successful because it didn't get to full TP. Though this merely peanuts was left on this one, but this one I think about 70% of the trade, I closed 30% there. 70% of the trade was still open. So a bit of it broke even, and the rest I just let it flow. And okay, so that was all the trade I wanted to take yesterday. One loss. Okay, this loss, this buy, I wanted to buy it to this place before shorting. That loss and a missed trade. I wanted to short on 2 minutes. I missed it, and then I didn't take any trade in London session today because I was waiting for the market to come down to where 4 hours should give you that insight. Should come down to that point, this point here. Now let me show you guys something. This right here is a break of structure. Now, if the daily closes above this point, then it would. How is time so fast like this? Now my this network has to be kidding me. Okay. Oh, the body has closed below it. This body has closed below this body, so it's a valuable break of structure. So what you'll be having is a bearish EU on a daily, and we could have something like this, or we could have it go to this top here, depending on how deep you want to pull back before it goes to this downside and a pullback. Now, why is this long here? Because our weekly is still bullish. So just follow structure, follow that flow, however you see it. Now, on 4 hours, definitely I knew this is a new low, okay? And this other block here, look at this other block, this one here hasn't been mitigated by anything. So definitely, once the market gets to this point, it is going to react. All right. So on your 1 hour, no 1 hour. Okay. So for the shorts, let me just quickly show you guys. For the shorts, it's as simple as having you have this nice. So it's as simple as that. I mean, this is the simplest price action so far this week. You have this, sell to the downside, boom. And if you have to refine this particular order block on 1 minute, because I remember I took, yeah, so this one, let me see if I can expand to it. That other block, yeah, is That other block is where I find the trade to, though I had another entry here. Yeah. If in case that one failed, because that's the closest one to to the pullback. This one, in case this one failed, then we'll be going to this one. But unfortunately, it didn't fail. So you have a reaction there, boom, to the downside. And the TP exactly, though I closed it before it got to this demand zone. So let me delete this off. Now on 30 minutes, what confirmed my buy? I mean, not just because there's a 4-hour block that has been unmitigated, I now begin to place a buy. No, it is much more than that. So this buy, how was it gotten? Remember how I said all this? Now, how I got this here? Read and run. I also got which one again? I mean, I was explaining 3-minute sales there. It's the same way. Yeah. Okay. So you have an incomplete range to the upside. They induced sellers to the downside. So what? You have two zones. Above here is liquidity. Above here is liquidity. All right. So where did they take out first? Which place did they raid out first? They raided this low first. Raided that low first, and that just confirmed my buy bias. Okay. So it confirmed my buy bias since it touched my 4-hour order block. Now this, how did I? Let me see if I can see how I. Okay, I think it's on 15 minutes, but I mean, if you want to refine that other block, if you want to refine the 4 hours, you can go to the 15 minutes, you'll see the other block there. Okay, so it took out this low first, and what did I say about once it takes out that low, once it took out that low, I started stalking EU on 5 minutes, not 5 minutes, I think 2-3 minutes. So I started stalking EU on even on 5 minutes, there's an entry there. Okay, so I enter aggressively here. Once it took out that low, I just took out my trade. I think my entry was around here. Then I placed the stop loss. Yeah, just 0.2p below this one, just for the sake of safety. All right. So then, how did this trade come about? This trade came about on 5 minutes. So your 5 minutes took out this high, so that's another block. Okay, and took it out. And where did it mitigate? Yeah, that's your 5 minutes order block. All right, and on your 2 minutes, you have a nice looking order block that you can just take the trade from. Okay. Now, if you use your 5 minutes, this is where your stop loss will be. If you use your 2 minutes, this is where your stop loss will be. But if you feel like you would want to be safer, you could have just placed your stop loss around that side. Okay, so that was how the short, the long trade is gotten. Now, where's my exit? My exit would be first. My 4-hour is still bearish, so I'm still careful of this other block here. No, not that other block. I'm still this whole thing, this whole other block is where I'm careful of. Is why I'm careful of. But this other block here is an inducement. So definitely above liquidity is where I want to take out my trade. Now, if the market reacts here, it might react, give maybe a small bearish reaction before eventually going to where I feel the market will end up. But I don't like to see my profit reduce. So I'll just exit 90% or 80% above here. So whatever it is the market wants to do with my remaining profits, it's free to do it. Let me look at. So that's just all for the trade review for yesterday and today. And yeah, I think that should be all. Do you guys have in 1 minute? Do you have any question before I eventually wrap my head around looking forward to tell you as farewell. So any questions as concerning what we treated today, Zich and Blue?
Ladies first, Zich.
Oh my God, Zich, are you serious? Yeah, I can hear you. I can't hear you anymore.
Okay, do you have any questions? No, I just have passing speech. When people are like, I wrote it down somewhere. Let me put the passing speech somewhere. Let me go and look for the paper.
Before, when you are as you know that in process of looking for it, let me just say what I need to say. Okay, so I don't think there's anything much I need to say. It's just that you can't learn everything at a go. You can't learn everything in just one video or two videos. It's something that it's continuous. And the most important thing, the most important ingredients you need for yourself is confidence. Believe me, if you are not confident of your trade, of your ideas, your plan on everything, nothing will work out for you. Because immediately you enter a trade, you begin to doubt yourself. So build confidence in yourself. And how do you gain confidence? By entering the trade, taking risk. I don't know, that sounds like an irony. But yeah, that's how you build confidence, by taking risk and seeing that what you took, the calculated risk you took, worked out. So that's just it. And eventually when you even take a loss, you know that, oh yeah, the market doesn't, I probably got it wrong here. Instead of, when you take a loss, you begin to doubt yourself. Do I know this thing? Don't I know this thing? There are two different things. Taking loss and knowing that, oh, you are wrong, and taking loss and beginning to, doubt your plan and everything. So that is the response of someone that is not confident, or someone that is fearful, or is not confident in his plan. So that, I think our first session was psychology. So once you've dealt with that, I feel like you've dealt with like 60% of whatever it is that you need in Forex. Your analytical prowess would grow over time. Say you take a trade of 5 hours before, you can improve and take trades of 10 hours. Now, the hour doesn't matter as long as you're in profit. If like take 100 hours, at the end of the day, you might still lose the whole 100 hours. So it's all matters on your consistency and your confidence. That's just, and yeah, I dropped something in the channel on psychology. So you guys do well to read it and make it your watchword, and do put something in your journal, plan. And I think that should be that should be all. See you guys in the main channel. I don't see any of you in emotional. Though